For more on Disney's quarter, let's bring in Puck News' Matt Belloni. Matt, good to see you. Is this pop that we're seeing, basically better than expected cost-cutting goals, some gains in subscribers? I mean, what is fueling this rise in your view?
I think it's cost-cutting. I mean, the street has been pretty clear for the most part of this year that it wants to see profitability in streaming. It wants to see some significant cost cuts, and Iger going up from $5 and change billion to $7 and change billion. That's a message. And I think the strikes have helped where they have, they've reduced costs. Their free cash flow because of that has increased. But I think that just the gesture of putting it out there that they are going to aggressively manage costs at Disney is what is causing this.
Do you think that we hear anything about ESPN on this call with analysts?
I think it's unavoidable. I mean, ESPN is the 800-pound gorilla of Disney, or it has been for the past 2 decades, and it's pretty clear that it's challenged. They have been in the market looking for a deep-pocketed investor to come in to help supercharge ESPN and allow it to compete for some of these big sports rights that are coming up, particularly the NBA. That's going to be an extra large check that ESPN is going to have to write, and they're going to have to manage this transition over to streaming. And Iger says he wants ESPN to be the premier digital outpost for sports. That is not easy when you are competing with Apple, Amazon, Google, all of them. It's really going to be tough.
And you're trying to rein in costs. I'm curious how you think Nelson Peltz factors in. December is when when he's cleared to start nominating his people for the board of directors. It's unclear how many seats he is after. He had some impact before. It does seem, though, that Bob Iger has a list of goals and he's sort of working toward them at this point. So what's your sense of how that factors in?
Well, 2 things. First, I do think the cost cutting is due to some of the activism by Nelson Peltz and Ike Perlmutter and some of the others who have criticized Disney for the spending. But Iger is setting up a very nice contrast here because he's putting forth 4 specific goals that he has for this company and a way to do it, where it's managing the costs in film, figuring out the future of ESPN, making sure that they are cutting costs in other ways. Nelson Peltz isn't putting forward that specific plan. So it's a nice contrast for Bob Iger to say, I have a plan and I'm executing. What are you saying we should do?
Do you think that we will look back on these days, these past few months, whatever time period, and say that was the worst period for Disney, and we'll be on the other side, and this quarter marks that? Yeah,
it's tough to be able to say that because there are some still significant challenge. They're releasing a movie this weekend, The Marvels, that is not expected to do very well. And that's part of the Marvel Cinematic Universe that has been untouchable until about the past year or so. They have to figure that out. They've got to figure out what they're doing with Lucasfilm and Star Wars. They have not had a Star Wars movie in 5 years. There's some tremendous creative challenges, especially on the film side. And on streaming, we don't really know what's going to happen between now and the end of 2024 when Iger says that he's going to reach profitability. Like you guys have said, if there's a recession, if there are other factors in the market that change the calculus there, that could be a big miss.